Hello and welcome to this first state of the ETF and digital assets in the Nordic. We in Kock, we are regularly having virtual events on different topics. For instance, last year we had the state of Bitcoin with a large crowd. And also this time we have more than 350 people that are attending. At least they have registered. But be sure if you have to take a break or have to do something else, this show will also be available as a recording, both on Kock, on the landing page on Kock, but also on LinkedIn, the LinkedIn event, and on YouTube. And we are really excited that we have 9 amazing speakers here today. And together we will then dig into the ETF and ETP space from a Nordic angle and look at it from different perspectives. And we will then also be having 9 different speakers, amazing lineup with people from more or less all the issues in the Nordics and in Europe. But also people working on distribution and also looking at the industry from more of a macro perspective. And we are also happy that we have been supported by 4 regulated companies. They are not ETF or ETP providers, but they are also looking into how you can get exposure for crypto. We have the crypto exchanges and brokers, K33, from Norway, Coinmotion from Finland that has moved into Sweden, and TYR Markets, which is also sort of a newcomer in the Norwegian market. And we are also supported by the Mint, which is then launching exposures to real world assets. So really amazed and thankful for this. Now we will move on to the talk, and we will add to stage also then Joachim from Nordnet, Joachim Wegebrand. Welcome, Joachim.
Thank you, Morten.
Yeah, and maybe you could start and tell us a little about yourself and what kind of responsibility you have in Nordnet.
Absolutely. So thank you, Morten, for having me. My name is Joachim Wegebrand. I'm head of exchange traded products at Nordnet. Which I mean the responsibilities are for exchange traded products, ETPs in the Nordics, and soon also in Germany, where we'll be launching shortly. So yeah, responsible for the exchange traded product offering.
Yes, and if we have also know a little about Nordnet, what kind of position do you have in the market, and what is your role, and how deep are you going into the different types of products?
So in general, I mean, Nordnet is we're a platform for savings and investments. We're a bank and a digital platform for clients to self-service, really, so that they do everything themselves. We are not advising. We have stocks, funds, like I said, ETPs. So we reach really into very many different types of asset classes and ways to invest and save.
So the investors are then able to do self-service, and you are trying to be a one-stop shop. Is that correct?
That's absolutely correct. So one-stop shop for savings and investments for our clients to do themselves, really.
Yes, and the type of assets that you have had for a long time is, of course, stocks and funds, and also maybe some interest products. But you have also moved into the crypto space through the ETPs or ETFs. And why is that?
We have, and I think we've been quite early in doing that. And why we've done that is because we've seen the demand from our clients, really. I think we can all say now that crypto has become a very big asset class of interest, something that clients want to invest in, both institutional but also retail clients that we are focused on. So we've seen that grow more and more through the past couple of years, and we want to be able to again be a one-stop shop and cater for all of our clients' investment needs. So adding crypto and a broader offering of crypto products for our clients to gain exposure towards that asset class is a given, really.
And what type of investors are then mainly interested in these products? Is it private banking customers, or are they also regular retail?
So it's quite spread out, I would say. It's about a third within our private banking clients. To add to that, our private banking clients or threshold for private banking is generally speaking relatively low. So mainly, I would say it's the broader retail audience. The typical client, if you want to sort of pinpoint one type of client, is a middle-aged man, really. So that's typically who is holding and trading crypto at Nordnet.
And what about the products? Because you are not issuing the products, but you are making them available. What kind of process do you have for picking the products that you make available?
So given that we are a self-service platform and we want to have a broad offering for our clients, we do have some criteria for the products that they need to fit in our placement universe. But typically, all the products that are listed, for instance, on Nasdaq Stockholm and GEM and Spotlight are within those criteria. So we see all the products that are coming in. We again want to have this broad offering, so we want to be able to offer as much as possible. But if we see something that is sort of clearly standing out, especially from a risk perspective, then we want to take a closer look at that. But apart from that, we want to accept as many products as possible for our clients to invest in.
And how has the development been for the last years? Because I mean, the ETFs was rather popular in the States for 2 years ago, and the industry is growing. And how is the development?
I would say it's an underlying positive trend for sure. If we're looking at the AUM, that's obviously dropped quite a bit now due to the market prices. But in general, we can see positive trends in terms of number of clients owning crypto or having crypto exposure. That's steadily growing month by month. Same goes for clients trading, so not necessarily adding long-term exposure, but also trying to trade a little bit back and forth. So I would say it's an underlying positive trend, and then we can see quite clearly spikes in that trend when we either have a sharp fall in the crypto markets or a sharp rise in the crypto markets. Especially in the rise, we see a lot of extra activity along with the on top of the underlying positive trend.
We are, of course, also following the distribution part of this industry, which is sort of our part of. And we would also like, for instance, to have Avanza here, and they are also in Sweden, they are not in Norway. You guys, you are all over the Nordics, as I understand.
Yes.
Yeah, and in addition, we have also registered that the banks are moving a little slow into the space. For instance, DNB, they launched a website last autumn, and they have made then ETPs and ETFs available through their brokerage. And the same is also the case with Nordea and Danske. But all the banks are talking rather low, if you understand. And you have also moved into the space gradually. Why is that? You're a little careful still, if you understand.
Yeah, no, I definitely understand, and I think it's reasonable to be a bit cautious still. Why we are is because it is still considered a relatively high risk asset class. Although we can probably all agree that it's well established and here to stay. It's relatively new, and there are still some some smaller coins that are very risky, for instance, and so on. So there is still a relatively pressing risk component to investing in crypto, and that's why we for instance, we don't have our own opinion on crypto. We're careful with talking about crypto to our retail clients. We try to inform on a factual and sort of high level basis. But I think it's right to be cautious, although we obviously still want to cater for our clients' needs and offer the products. But some caution is healthy, I think.
Yeah, is it also because we are still early and there is the need to learn and build knowledge? And as I understand, you also are having rather many, or are participating on different events together with the other issuers. Is that a way of learning investors about these things? And then the learners are then the issuers?
Yes, yeah, that's true. I mean, we're no crypto experts at Nordnet. We have some knowledge, of course, but we're no experts. And so we want to help educate our clients. And one way of doing that is by collaborating with experts, such as some of the people in this call, to educate our clients in physical events or virtual events, for them to sort of give their view and their expertise and knowledge and share that with our clients, so that our clients can hopefully make better investment decisions.
And of course, it is possible then to buy also as a spot or whatever. You can buy the different ETPs, but you have also launched a saving product where you can buy monthly, if I understand. And of course, you have that also on stocks and other type of assets. But why are you doing that, and what has the interest been?
Yeah, that's true. So we've launched monthly savings or recurring savings for crypto ETPs. We don't offer all the crypto ETPs within that savings form yet, but we're adding more and more. We launched it in early September last year, and the reason we're doing that is because we think it's a good way to get into crypto for the first time and to gain some crypto exposure, actually, whether it's the first time or if you're continuously buying. So for those, maybe especially for those who are trying or buying a crypto for the first time and don't know really what to buy or when to buy, we think that the monthly savings, which is a DCA approach, dollar cost averaging approach, is a great way of doing that, since there are quite high highs and low lows and a lot of volatility. The recurring savings is a savings form that we are talking about quite a lot at Nordnet, whether it's ETFs, funds, and so on. We think it's a great approach and as a cornerstone to your savings and investments. So we wanted to add crypto to that because it is a new asset class and it is a little bit difficult to know how and when you should buy crypto, but maybe you still want to get a little bit of exposure. Then the DCA approach is pretty good. And there are products on Bitcoin, Ethereum, but also index products, for instance, so you can get a broader exposure and buy into each month. So we think it's a good product, and what we've seen initially, we saw that about 80% of our clients signing up for this recurring savings in crypto actually never had traded crypto before. So that sort of confirms our thesis that it's a good way to start, that 80% bought crypto for the first time within this savings form.
And that means that, for instance, if you started saving when the Bitcoin was at 120,000, but you are now accumulating on 60,000, then the genomsnitt or whatever you call it is then lower. So it's sort of investing and getting more, getting a portfolio that is more balanced after some time.
Yeah,
is that
exactly.
Correct? Mm-hmm.
That's correct, and that's the idea. Yeah.
Mm-hmm. Thank you very much, then, Joachim. And as I've said in the introduction, it seems like this way of distributing ETPs and ETFs also through the regular brokers in the stock area also is increasing. So, but we are happy that you could share your knowledge with us, Joachim, and wish you well.
Thank you.
And then we will continue with the umbrella view, if you could call it that. And we are welcoming Martin Leinweber from Frankfurt, or outside of Frankfurt. Welcome, Martin.
Yeah. Hi, Morten. Thank you for having me.
Yes, and we need a little introduction of who you are. I have known you since you and a colleague released a book about Bitcoin a couple of years ago. But what is your role today?
Yes, so beside being an author of a book, I'm working as the head of digital assets research and strategy at MarketVector. We are an EU benchmark regulated index provider, and doing all asset classes, but especially crypto since 2017. So for a very long time, offering the whole suite of crypto indexes, and very recently also blending stocks and crypto together in a thematic way, which we did for US ETF issuers last year.
Yes, and if right now it's hot in Europe. It's not hot in
exactly,
crypto.
yeah. It's very hot, yeah.
But it's not hot in crypto. So what kind of market are we seeing, and why are we where we are? Because you have, the whole Wall Street based industry is moving the financial system into the blockchain. We have the stablecoin. We have integration between AI and the blockchain. So why are we not seeing record prices?
It's a great point. The fundamental backdrop with Wall Street and the regulatory clarity is incredibly strong right now. I agree, but what the market structure is telling us is a much more cyclical story. Yeah. So the main thing to keep in mind is that market bottoms are a process, not just a single news event. So we are seeing this cascading effect on the charts, where each leg down is getting smaller and smaller, which is good. So the selling pressure is clearly exhausting itself, but it takes time to carve out that final low. So, and on top of that, Bitcoin doesn't trade in a vacuum. Yeah, it's heavily tied to the broader macro environment. And if you look at the S&P 500, especially in midterm election years, where we are, you typically get this seasonal drop in June, July, August, maybe into the October, right? And Bitcoin is really just caught in that same mid-year turbulence right now. And I think ultimately it comes down to liquidity. There's still a lot of capital parked on the sidelines in stable coins. So we are seeing some good daily buying step into this defending 60K level. But we haven't seen the massive, undeniable capitulation volume on the monthly charts that usually scream the bottom is in. So I think that will be later in Q3, Q4 this year.
Yeah, and we also have these massive investment in data centers, as well as also in shares within the AI sector, like SpaceX. So is then people selling their Bitcoin and moving into other types of assets?
Yeah, I think you really see that. It's all about AI at the moment, and nobody's interested in crypto, although I think AI and crypto go hand in hand. But I also think that maybe we see a sector rotation out of AI into other sectors later this year, because it's so hot at the moment. AI is priced to perfection. I think if you see a slowdown in the hyperscaler in investing in it, or if you see some competition from China regarding chip production, etc., this money can easily go into other sectors. And for that reason, I'm watching the software sector a lot, because I think that's also there's a high correlation between software stocks and crypto. So it seems that software stocks have bottomed, and I think if we see that rotation, there's a good chance that also Bitcoin and crypto in general can recover.
And we also have an issue within the crypto sector as such. I mean, the MicroStrategy, the Michael Saylor bet on adding Bitcoin to the balance sheet, but also offer other types of investment vehicles around that investment. And is that can that blow up? What do you think of it?
No, I don't think it blows up. And I wrote a LinkedIn post today. So over the weekend, Strategy rolled out what they are calling a digital credit capital framework. So they've ring-fenced a cash reserve to cover the preferred dividends, raised the stretch coupon to 12% to defend it near par, and authorized buybacks of both the preferreds and the common, funded if they need to by selling Bitcoin. And so the way I read it, and that's important, the framing matters more than the mechanics. So the whole MicroStrategy model ran on one thing, trading at a premium to the Bitcoin on the balance sheet, issuing stock into that premium and buying more coins. And that only works when the premium is well above 1. And right now, it's basically at 1. So the engine that made this company special has effectively switched off. And what's left is liability management. Yeah, they've got a big preferred stack that cost them almost $2 billion a year, a software business that barely throws off cash, and Bitcoin that doesn't pay you anything. So this isn't a growth plan anymore. It's a plan to keep the lights on until the premium comes back. And the honest question for investors is whether you even need it anymore. So if you want Bitcoin, you buy the ETF. If you want the leverage, you buy options on the ETF, for example. And that's cheaper and cleaner than a company that right now looks like a hedge fund trading its own capital structure than a simple Bitcoin proxy. Yeah, that's the way I see it.
Okay, there are, of course, different opinions about that, but we will see what is happening. But okay, we have this macro situation, we have this liquidity situation, we have this issue about strategy within the space. We have Bitcoin not moving upwards. How should then people think about ETPs and ETFs, even if it's embedded sort of the asset class and it's available as a regulated product? But should you stay or should you go?
I think it's more about doing your risk management and your exposure. But I think now, as I've told you at the beginning, it's rather a phase where we have an attractive price setting going forward. And I think for the ETP clients, I mean, there are also ETPs which invest in broader baskets. And I think if you know nothing, it's a good proxy just to buy the crypto asset class, because I think the last cycle was Bitcoin dominated. I think the next cycle will be more altcoin dominated. That doesn't mean that I see the smallest coins running, but I think we now have tokenization, stable coins. AI will use crypto for payments. And so I see more use cases there than just in this store of value asset, which Bitcoin is. And so if you're not super pro in that market, why not buying just a top 5, top 10 or larger baskets? Set and forget, do your DCA as we heard before, what Nordnet does, and have your allocation, whether it's 1%, 2%, 5%, stick to that, rebalance. And I think then it's really an easy business. Don't overcomplicate things here.
But still, if you want to pick the winners, if you understand, it's not necessarily the old coins, if you understand. Maybe it's new kids in town, like Hyperliquid, like the AI tokens. And is that the case?
Yeah, I mean, what people don't know, everybody's just so focused on Bitcoin, and then you look at that altcoins and they are underperforming Bitcoin. But what people very often don't know is that there are a lot of coins outperforming Bitcoin, or maybe not a lot, but more than a handful. And interestingly, you mentioned Hyperliquid, and also other decentralized perp exchanges are very successful now, because I call them the post-Gary Gensler coins, because they are burning or buying back their token. Maybe that's the better analogy for your audience, in relation to the revenue they are generating. So the token holder can benefit from the success of the protocol. And at the same time, you also see protocols like Tron, which are heavily stablecoin related, quite successful. For example, Hyperliquid, right, the largest decentralized exchange perp, outperformed Bitcoin by over 120% over the last 12 months, and Tron over 60%. And the list goes on. And also privacy had a comeback with Zcash and Monero. So people should focus on these new narratives and on tokens which can outperform Bitcoin in a bear market, because very likely these coins outperforming in a bear market might also have a good odds to be at least a good performer also in the next cycle.
And if you also want to play on the Wall Street and the banking, investing in a new financial system, then privacy is also important, isn't it?
Mm-hmm. Yes. So I have to say it's still a small section if you look at the protocols, but maybe one promising network is the Canton network. It's also a very young layer 1 chain. But the whole thing is built on privacy. And if you think of it, it's not about secrecy. I have to highlight that. It's really about compliant privacy, so that a bank can transact confidentially, or a hedge fund, right? You don't want to blast that out onto the blockchain where everyone can read that. But for example, if the regulator wants to see it, they can unshield it. And so a lot of financial institutions are now on Canton. And I think more and more these kind of networks, also networks which hide the logic of a smart contract, which is maybe your IP. Yeah, you have a formula, a model, which is your IP. You don't want to publish that on the blockchain. I also see a use case for that. Yeah, so privacy compute. But it's still very narrow, very niche. So I think that's something for the next cycle. Yeah.
There's one question I have to ask you, because everybody has been talking about when the Wall Street and the banks and whatever have moved into the blockchain and the crypto space, then the 4-year cycle was history. But you believe it will come back?
I mean, it looks, if I look at the charts, it looks like we still have the classic 4-year cycle. I know there was this argument with we have now the ETFs, the institutions are in stablecoins, tokenization, all that stuff, and why this is true and real. It looks like, just from a chart perspective, that we could make, and I said that at the beginning, a new low in Q3, Q4. And I don't talk about these halving cycles. I really talk about from low to low or high to high. You also have these 4-year cycles, and I think it fits to my thesis, at least, right? Whether we had the low now or in Q4, I think just from a volume perspective, I can imagine we have a final washout due to the mid-season argument and a weak summer. And then maybe in the 50s we find a low, and that would perfectly fit this chart, this 4-year cycle chart. So it's my working hypothesis. Let's see if it plays out.
Yes, let's do that. We will thank you very much then, Martin, for sharing this insight with us, and good luck with the hot temperature in Europe at the moment.
Thank you very much. It was my pleasure.
And then we will move on, and we will welcome Markus Thomas to the stage. Welcome, Markus.
Hello, Martin. Thank you for having me. Can you hear me and see me?
Yeah, totally okay. And you are traveling in Europe at the moment and joining on the railway station. So, but it sounds and looks good. So, but let us hear a little in the beginning who you are and what you represent.
Yeah, again, thank you, Morten. I'm traveling today, so I'm joining you from the Zurich railway station. I just arrived this morning, and I'm not in a church. Maybe the impression maybe like this. It's an Italian restaurant and a still corner. So my first name is Markus. My family name is Thomas, and my company is XENIX. We have founded XENIX in 2009. We are an ETF and index specialist, and we are focusing on analyzing and making comparable index-linked investment products. Our focus is on ETFs, but we also cover crypto ETPs and ETCs linked to gold or other commodities.
And if we start on the overall level, independent of what kind of asset classes that is linked to an ETF or ETP, what is quality in this market? Because you are working on criteria and you're also doing boards. What is quality in this market?
Okay, maybe I'm allowed to step back one step to the structure. So also to make a disclaimer, everything I'm telling here is no financial advice. It's just to explain the main structure from a portfolio perspective. So we have the World Cup currently. A team is like a portfolio. You need to have a goalie, you need to have defense, midfield, and forwards. And in every portfolio, the two core asset classes, academic research since 70, 80 years has demonstrated it needs to be bonds for stability. You earn interest, and you need equities. You will earn dividends. And by this, you have a steady income based on these two core portfolio holdings. So every ETF we are rating before we start the rating process, we are evaluating, is it linked to a core asset class, and is it representing a core market? Like a core market is European bonds or global bonds, and it's not just a sector like equity technology sector ETFs or theme ETFs. So every technology and also a satellite, like Martin said before, which can be added to the core of your portfolio. And when you just want to make different risk profiles, bond has the lowest risk profile, then we have equities, then we have gold, for example, we have broad commodities, and we have crypto. And as Martin said, you can have Bitcoin or you can have the rest of it. So I'm a simple guy, so I would say crypto is there to stay. Everything else, you never know. You need to be an expert like Martin to evaluate if this technology will really have a breakthrough or not. So this is what is happening from my perspective. And coming back to your quality question, exchange traded index linked products. So you have to look at least 3 levels of quality. First of all, is it really a good, diversified and transparent index? This is the same question. There are different index methodologies to calculate Bitcoin, because Bitcoin is mainly valued in US dollar on the non-regulated crypto exchanges, but you want to have it in Swedish krona, in Norwegian krona, or in euro. So there needs to be a mechanism just for this currency conversion, and this should be explained on a transparent basis in each Bitcoin index. And there are different methodologies, and for sourcing the price for Bitcoin, you also need to have different sources. So this is the first step. We do also this for bonds, commodities, and equities. The indices are crucial, and they need to be transparent, rules-based, and then you know what you are really investing in. Second layer is, how is the product structured? I'm an ETF specialist, so every ETF in Europe uses the acronym UCITS ETF. So every time you see UCITS ETF, you know it's regulated, it's ring-fenced, you have no issuer risk. With crypto ETFs, you have actually a note. You have issuer risk, and it's less I would say, from my perspective, less regulated than UCITS ETF. So this should every investor do your own research look at, and we do it with our rating process to give the investors guidance and to save time. And we do this from an institutional perspective because we are also advising professional institutional investors based on our analytics and market intelligence. The third layer I want to talk about is the exchange. And I just looked up this morning at Nasdaq. Nasdaq has a nice webpage for ETFs and ETNs, including crypto products and also now gold and silver ETCs. They are either listed as special for the Nordics, that each country has its own currency still. But you can see how much of these products Martin mentioned, no matter if it's Bitcoin, stablecoin ETPs or altcoin ETPs, how much they are traded. And investors should be aware the exchange itself, it's an equity exchange. They are regulated. They are higher regulated than any crypto exchange, I would assume. And you have trading, which is regulated from 9 to 5 every business day. And you get price, bid, and I hope you still have me. Yeah, the picture was frozen shortly. So you have the price on exchange and you have market makers behind, and the market makers are independent from the product providers. So I get support from the exchange, from the market maker and the product provider. And this is the perfect setup for retail investors, because in the long run, I want to have maybe buy and hold investments, especially for core products. But if I'm in the satellite investment space, it's good that I can sell in the morning or that I can buy in the afternoon when the US has opened. So this liquidity is helpful for investors, but it has to take into account the local currency spread for Swedish investors in Swedish krona, for example, and for Finnish investors in euro. And this is what matters, because this spread, you will feel it in your securities account. You don't see it on the fact sheets. The fact sheet just tells the performance of the product, which is not yet traded. So in this way, we include these multiple perspectives. We have a huge data set, and to aggregate it, and our main target is to say, is the product average quality or is it above average quality? Then it gets 4 or 5 XENIX stars from us, and then it means the index is perfect, the underlying the product is good, it's a good tracking product, the product tracks closely to the index, and it's liquid on exchange. Like I wanted to mention this morning, the highest traded product on Nasdaq at 10:30 when I looked at it was a Bitcoin ETP. There were 60 trades I saw and a volume of roughly 700,000 Swedish krona. So you can see Bitcoin was this morning perfectly tradable for any investor who is linked to Nasdaq. And this is what matters and what people need to consider when they make their investment decisions, beside the underlying structure, beside the underlying risk profile they want to invest in.
So what you're saying is that even if you are investing in ETPs or ETFs, you have to first look at what is it pegged to, or what is it linked to, sort of. Is it stocks, is it bonds, is it commodities, or is it crypto? And the second one is that also within each class you have to look at the quality. And as I understand, you guys are rating 3,000 products at the moment. So how can, it seems like we are losing Markus at the moment. But we thank you then, Markus Thomas, very much for his contribution. And of course, right now he was inside of a railway station in moving around in the continent. We will continue then with Alex Pollak, and because we are now moving from sort of a macro and distribution and overall umbrella way of thinking to talk to people from the industry. And Alex, you are then representing 21 shares, and as I understand, you have 20 years of experience from the ETP industry. But give me a short introduction.
Good morning, and good morning from London. Hi, Morten. Can you hear me?
Yep, totally.
Excellent. Well, first of all, thank you very much for having me on, having 21 shares on this morning. Pleasure to be here. Very interesting to listen to the previous speakers. As you say, yes, I'm Alex. I work for 21 shares. I'm in the distribution team. I joined the company 4.5 years ago. I'm responsible for our business in the UK and some of our growth markets, including the Nordics. The Nordics is an absolutely key priority market for us. I joined 21 shares from BlackRock. So I spent the previous 15 years at BlackRock, including many years as part of the iShares business. So I swapped the I for 21. I've been very excited. I was very excited 4.5 years ago about some of the developments I saw in the crypto space. So, and at the time, BlackRock wasn't doing anything, so I moved to 21 shares.
Yes, and for a lot of people in the crypto space, maybe we discovered the industry when, the ETP and ETF industry, when these ETFs was approved in the States. It's about 2.5 years ago, exactly. And you guys were one of the ones, but together with ARK. And how important was that happening?
The opening of the US market was an absolutely critical milestone, I would say. I mean, if we go back to the time before the US market opened up, we'd been going through a little bit of a crypto winter as well. So we'd obviously kind of had our downturn. Having the US market open up, having the US kind of create a regulatory framework that would allow issuers to come in and launch ETFs was absolutely massive for the industry. And actually, when products launched in the US, including, as you say, the ARK 21 shares product, it represented some of the most successful ETF launches of all time. It was absolutely huge. So yeah, I would say the US market was a milestone. Because of the regulatory framework, because of the institutionalization that we started to see around that, and it became more mainstream. It's becoming more mainstream since then. And a good proof point of this, Morten, is what we see in the 13F data. So for those listeners who aren't familiar with US 13F filings, in the US, if you hold an ETF, you have to disclose your position to the SEC, and it's publicly available. So what's happening is every quarter you can actually see who is buying these ETFs, including the crypto ETFs. And what we've seen consistently over the last 2.5 years is you see more and more kind of big institutions buying these ETFs. So it started out that it was many hedge funds buying the ETFs, but over the last couple of years, you've seen pension schemes, you've seen endowment schemes, you've seen sovereign wealth funds, you've seen private banks, many traditional investors buying it. So people have noticed this, and we're starting to see, or we have been seeing that trend globally as well.
Even in the Nordics? Do you know?
Even in the Nordics, I would say right now, it depends on which Nordic market you're looking at. I think the adoption is different in Norway, for example, versus Sweden. So, we had Joachim earlier from Nordnet. Clearly they allow their clients to buy crypto ETPs. I would say in Sweden, it's very much a retail product. Retail investors in Sweden, they like using the crypto ETPs within their portfolio, whether it's in a savings plan or otherwise. But I think if you look at Finland or in Norway, for example, you have different kind of users there. So in Finland, it's more institutional. In Norway, you have a big crypto community as well, but I think for various reasons, it's more investors kind of going direct into crypto, direct into the spot market. But I would say the adoption in the Nordics is very good, and I'm not surprised because the Nordics is a part of the world which is very tech savvy. There's a lot of startups in the Nordics. You see that with the kind of companies that list on the Nasdaq. So I'm not surprised, and I think we've got a very exciting road ahead of us as well.
We're sort of joking about it, we Norwegians, among our Norwegians, that we love fish, we love oil, we love Bitcoin, we love the real thing, not the wrapped thing, if you understand. But maybe this will change. But how have you seen the industry evolve during these 20 years that you have been part of it? Personally,
and so Morten, when I started in the ETF industry over 20 years ago now, and I was based in London doing that, people were very skeptical of the ETF industry. It was a time when mutual funds were very popular. We had advisors would talk about mutual funds to their clients. They would get paid commissions off the back of it, and people were very skeptical and didn't believe that the ETF industry was going to do very well. And when you look back now with the benefit of hindsight, 20 years later, ETFs have been unbelievable. I mean, I would argue that ETFs represent a technology where, as an investor, you can get exposure to an S&P or to an OMX or whatever market it is, to a sector through one share. It's been an amazing technological development, and we've seen incredible growth over the last 20 years. But I do remember when I started at BlackRock within the iShares business, people were very, very skeptical, and we had creation days of $100,000, and people were kind of high-fiving and hooping and jumping up and down, and they didn't believe that the growth would continue. And look at where ETFs are now. It's been unbelievable globally how this industry has grown. I think the same is going to happen with crypto ETPs. People are skeptical now, and I understand why people are skeptical now a little bit about the industry. Prices have been a bit muted, but I think what we're seeing happening in the crypto industry is really exciting. You're going to see more traditional investors using ETPs to get exposure to the space in the same way they use traditional ETFs. And I think when we look back at this in about 10 or 15 years, we're going to have seen the same kind of growth in the crypto ETP space as we saw it with traditional ETFs. It's going to take a bit of time, but as I said, I think we've got an exciting road ahead.
But still, after this record investment and inflows, now there are outflows.
Yes.
And how does that affect, and is the ETF and the ETP industry even a canary in the mining, if you understand, because the liquidity is also part of the equation? And what role does this sector play also when it comes to price?
Yeah, I mean, look, Morten, I don't think, when you look at kind of the way that markets evolve, it's very rarely in a straight line, right? So you have ups and you have downs. Over my career, we've had so many different cycles. So, clearly, I think we have seen, obviously the prices have gone down this year, but actually we have seen inflows. Bitcoin's seen good inflows in Europe over the course of the year. We've also seen inflows to Ethereum. Obviously, kind of the last few weeks has been difficult for the industry, but if we look at the net numbers over the course of the year, we've seen inflows. You had Martin earlier talking about Hyperliquid and the exciting development there. Hyperliquid's been a very successful coin, I would say. So I would say that flows have been muted, and there's understandable caution. But actually, over the whole, we have seen inflows for the industry.
Yeah, and what about the industry? Because at least for the last couple of years, there have been more issuers, there are more distributors. And how do you see the competitive landscape, and what role does 21Share have and in the European framing and also in the Nordic framing?
Yeah, I think look, competition is obviously great for end users. And we see a lot of competition in the market, and I think that's, you've got a lot of new issues coming out, and the one thing I would caution investors with is to say that crypto is a very different asset class to equities or bonds or commodities. And so if you are a customer and you are interested in getting exposure to crypto via a crypto ETP, what I would say to you is that make sure that whichever product you're going to use, it's a provider that has expertise in the crypto area. We see a lot of traditional firms launching crypto ETPs, and that's fine, but you've got to ask yourself, do they actually have experience? And do they understand the nuances of crypto? Because having a Bitcoin product is very different to having an S&P 500 product. Having a basket of cryptos is very different to having an equity sector product. So you want to work with issuers that know what they're doing. And from a 21Shares perspective, we are one of the original crypto ETP providers in Europe. We launched back in 2018, so we're nearly 8 years old. 8 years is not a long time, but in the crypto ETP industry, it is a long time. So we've had a lot of experience ourselves through upturns and downturns. So our products have been stress tested. In the crypto winter, for example, a few years ago, the products did exactly what they were meant to do. And so, I think competition is good. I think it's wonderful that investors can kind of have a myriad of different investors or products they can look at, but just make sure that when you're looking at the product, or when you're considering which issuer to use, that it's a product that really an issuer that really understands the crypto space.
Okay then, thank you very much then, Alex, and we look forward to meet you again in one type of event or another. So thank you very much.
Thank you, Morten. Take care.
Yeah, likewise. And we will then continue also with another guy located in UK at the moment, James. Welcome. Do you have you have to put the sound on? Yeah.
Sorry, I had it.
Yeah, welcome, James, and you are from CoinShares, but maybe you could start with presenting yourself and your responsibility.
Yeah, okay. I've been 26 years now in finance, the last 6 in crypto. I used to be a fund manager running a large multi-asset discretionary portfolio. I then moved to ETF securities, which was specializing in gold, and it was there we had a lot of questions about digital assets, particularly Bitcoin at the time. So I started mining it myself, Bitcoin and Ethereum, just to understand it better. And I suppose the more I looked into it, the more compelling a concept I found it. And it's been great over the last years being at the forefront of that growth, being an incredibly niche asset to one that is starting to become more widely accepted by institutions.
And maybe it's important to say also that you are head of research in CoinShares. You are not in the push the product department, as I understand it.
Exactly. Yeah, I'm here to tell you how it is in the markets, not to sell you anything. So hopefully I can.
Yeah, and what that the industry is then looking into is what that maybe this product started on the retail part and then on private banking, and maybe we are now moving into the institutions. And as I understand it, you have done some surveys several years in after each other, asking and doing some questionnaires about what are the institutions doing and what you see, what are the trends.
Yeah, we run 2 surveys. One is more sort of infrequent, and it looks at some of the big trends. And the one is more about how investors are positioning themselves. So On the first one, I think, just thinking about 5 kind of key takeaways from what is quite a big survey. What's really interesting from that survey is around a quarter of European advisors report that more than half of their clients' asset management exposure sits outside and is unmonitored from their sort of advisory relationship. In the UK, that reaches 52%. And I think this is partly because of this kind of institutional lock, we call it. So quite often advisors can't talk about digital assets, or it's not available to them on their platforms. And so ultimately individual investors are choosing just to find other routes to access ultimately. So, I think a lot of the unlock to sort of product asset is about regulation. One of the top fears people have is regulatory recognition. Around 40% said that was an issue, and another access to ETP said another 43%. So just those two alone, sort of regulatory recognition and access, represents 88% of the survey responses. The top concerns in the survey tend to be around volatility and the speculative nature around it. The issuer selection part, well, its track record is a number one criterion. Around 73% of the responses found that the most important part. So that's one of those sort of very broad industry surveys we do. We also run another one. It's called the Digital Asset Fund Manager Survey. I send an email out to a select group of clients, not just clients, people that don't invest too, every quarter. It tracks around $1.3 trillion worth of assets, so a fairly broad set. And what we find out, some of the most important takeaways, is the average weighting in a portfolio of digital assets tends to be around 1%. And that quite often we've seen that echoed when we go to see clients. We recently had a pension fund invest, and that number was 1%. That seems to be the kind of the first step into the digital asset space. And then I think what's interesting is how that survey tracks over time. So the top risk had been a government ban. I think since the US has regulated, since MiCA has regulated, that has fallen away. Still remains the second largest concern, but is a lot less of concern. And volatility is the primary one, as the other survey suggests. But for me, the most important, interesting thing about that survey is what are their reasons for adding digital assets. So when we started the survey back in 2021, around 60% of the responses were saying it was speculation ultimately, which is understandable given we're witnessing the birth of a new asset class, and there's very mixed level of understanding in it. It's understandable such a huge number of responses said that. In the survey that we last did, so ending for the end of March, only 15% of responses were for speculation, and we've seen that sort of steadily trend down over time. And now the top reason for investing is diversification. 40% of the responses say diversification is the main reason why. And speaking to clients, that a lot of it is to do with the what ifs in the world, these tail risks. What if monetary policy system stops working properly? What if we have a sovereign debt crisis in the United States? What happens if we have hyperinflation? And people are looking to diversify away from some of those tail risks. And Bitcoin is that insurance policy, they see it as. The other sort of big 30% of responses are people want access to the growth of distributed ledger technology.
But 1% doesn't sound very much as a diversification.
Well, yeah, but that's comparing it, I suppose, to TradFi assets. If you look since 2017 and you added a 1% gold position, you would see or let's say 4%, because that's the numbers I know. If you had a 4% gold position, it would increase your Sharpe ratio from 0.56 to sort of 0.58. So an impact, but very small. Whereas something like Bitcoin in particular, you'd see your Sharpe ratio over the same time period go from 0.56 to 1.06. So a little bit of Bitcoin goes a long way. So a small amount of Bitcoin tends to have a really sort of material improvement in the risk-adjusted returns. So, and a lot of our clients are coming to very sort of similar conclusions to that, and so have small positions. Interestingly, through our work in the portfolio analysis, if you have anything more than around 10 or 12%, you have there's quite a sharp drop off in improvement in risk-adjusted returns. So that seems to be the sort of the upper limit. But in all honesty, not many clients have that level of exposure.
Traditionally, or for the last years, the main exposure has mainly been in Bitcoin and in Ethereum, and after some time also some other altcoins. But you have also done some research and also offered products where you can also run on another type of narrative. I mean, the investment in AI, the investments in the infrastructure of the financial system, because it seems like that thing is happening while the investment opportunities is not linked to it. But you have a way of doing that, as I understand.
Yeah, we try to sort of offer kind of broad exposures to different digital assets. I think for us, maybe perhaps compared to some of our competitors, we can be quite selective. We're trying to identify tokens which have a very sound investment thesis. I mean, that's particularly important to us. If you look at, say, assets under management in digital asset ETPs, there's around $100 billion in Bitcoin globally and around $20 billion in Ethereum. And then the assets under management drop off very rapidly. So XRP and Solana have around $3 billion each. And then Hyperliquid, the next one after that, around 300 million. So that drops off very rapidly. And so what that's telling you is investors are more comfortable in the sort of top two, and then outside of that, it drops off very, very quickly. So not many have ventured outside of that. But there's another part that we look at. We run a blockchain equity fund. If you include our mutual funds in Japan, that's around $1.7 billion in size. And that is investing in the blockchain theme, not necessarily Bitcoin at all. So there's quite a broad set of companies that are involved in crypto or blockchain in some way or another. The pure plays would probably be Bitcoin miners, which we invest in. They're actually interestingly getting heavily involved in AI. By our estimates at the moment, around 30% of revenues are in AI. But by the end of the year, 70% of revenues will come from AI. So there's a big change in that industry. There's a huge global payment sector. PayPal and MasterCard are getting involved. Mercado Libre in Brazil. We also have the semiconductor industry involved in it. So TSMC creating the Bitcoin mining chips and to some extent the AI chips as well. And then we have Canaan, a Bitcoin mining company. We also have, quite contentiously, what we call token investments, is what people see here of now as DATS, digital asset treasury companies. And obviously there's very mixed the sentiment towards those assets. And then there's a growing participation in the financial industry. And that's an area which we see a real growth in. I think after the sort of AI zeitgeist or the bubble bursts, people will start to look at tokenization. At the moment, tokenization represents stablecoin industry is around $300 billion. The real world asset industry is only around $30 billion at the moment. It's quite small, but the growth in stablecoins alone is expected to be $2 trillion by 2028. So huge growth potential. And we're certainly adding companies in the index that reflect that theme. We've been very successful. This year we're up. Last year we were up 45%, and this year we're up, even in this sort of downturn, we're up 20%, and we have a Sharpe ratio of 1. So we're holding up pretty well during this downturn in the crisis. But it gives another form of exposure for those clients that don't necessarily want direct one-for-one exposure to Bitcoin or Ethereum.
But it must be hard to pick the companies, because most of them are not doing this bet only. I mean, if you are Visa, MasterCard, that's a financial bet as well as also when it comes to stablecoin. So how do you balance that way of thinking, if you understand?
Yeah, I think what you're sort of alluding to is quite common in a growth industry, and the blockchain industry is very much a growth industry right now. So you have these companies, what I'd class as non-bellwether companies, that are dabbling in the space. You know, Oracle has its own blockchain, for instance, but it's not a core part of its revenue. But we do therefore warrant a low weighting of Oracle, and with the expectation that that part of its business could really grow, and we want to capture that. And then you have the more sort of pure play companies, such as Bitcoin mining companies, which even they're diversifying. So there's always that game, that approach between these sort of bellwether companies that really reflect the blockchain industry and those that are just dabbling in it. We're trying to sort of balance off the two.
Okay then, James, that was an interesting perspective. So it's not only about Bitcoin, it's not only about Ethereum. There are possibilities also through a vehicle like ETPs or ETFs to have other types of exposure, as I understand. Thank you very much then, James.
My pleasure.
And then we will move on, and we are then moving from London to Stockholm. Welcome, Christopher.
Thank you very much, Morten. Very happy to be here.
Yes, and you are sort of, not today, of course, but 3 years ago, you were the new kid in town. And you saw an opportunity in this industry. And how did you do that? And what type of a position were you aiming at that time?
Yes, exactly. So beginning from how Virtune's journey started was that we clearly saw that crypto is not only here to stay, but also to grow and over time become a natural part of investors' portfolios. On the same time, we also knew that the crypto has for many years until recently and just now been quite unregulated, and there has been many incidents that has hurted the end consumers and so on. So we decided from day one that in order for us to be successful in the long term, we need to be as regulated as possible, and our DNA needs to be transparency, investor protection, and educating the market in every way we can. And on top of that, also being a local player here in the Nordics. So back in May 2023, so approximately 3 years ago, we listed our first crypto exchange traded product on Nasdaq Stockholm. That is our home market. And as of today, we have a total of 23 different products providing either exposure to single assets such as Bitcoin or diversified exposure to several crypto assets. And in January last year, we also introduced the first ever crypto exchange traded products in Finland on Nasdaq Helsinki.
Yes, and we are in Kock, we are also partnering with K33 and Nordic Blockchain Association when it comes to this survey being done each year. And then I think about the Swedish participation on ETFs is about 30% of people that have a crypto exposure, while in the other countries there are 5 or 6% or something. Why are Sweden that far ahead, and what is the potential in the other markets?
Yeah, so looking at Sweden compared to Norway, Denmark, and Finland, one big difference that we have in Sweden that is quite unique globally, but that is the fact that crypto exchange traded products can be held through your ISK and KF wrappers, meaning you pay a flat tax instead of 30% capital gains tax, which is the case if you buy crypto on a spot crypto exchange, for example. So that gives a clear tax advantage in many occasions by investing in crypto through exchange traded products rather than spot. But if we look at the Nordic market in its whole, one issue obviously for increased participation through ETPs is the fragmentation of the market, in the sense that we have different currencies in each market. We have the Norwegian crown, the Danish crown, euro in Finland, Swedish crown, but also that we have different CSDs. So I think there's a lot of potential, and we have been very active across all the markets in the Nordics for the last years, and we are seeing steady inflows in all of the different markets. But I think a key element to accelerate that even further is to also be able to offer locally listed products. So that is certainly trend we saw when we listed in Finland, for example, that has helped us accelerate our growth in the Finnish market.
While in Finland and Stockholm and the Baltics, you can do it through Nasdaq, but you can't do that in Norway. So how are you going to be listed in Norway?
Well, as of now, we are not, and we will see how the future evolves. But what's at least positive is that Norwegian investors can access Virtune's products through, for example, Nordnet and DNB, and are able to trade them both in Euro and SEK. And we have also been doing quite a lot of activities in Norway quite recently, where we are seeing a growing interest for crypto ETPs as a regulated way to gain exposure to crypto assets.
What about the typical client or customer? It seems like you're moving quite heavily into the private banking market, also in cooperation with Nordnet, as you said, but also with Avanza. How is your position in that market? And then are you also moving into the institutional market?
Yes, so looking at our current position, our products are trusted by more than 160,000 investors across the Nordics. And if we look at the trading volume, we also have more than 90% market share of crypto ETNs on Nasdaq Nordics. So a lot of this is, of course, retail driven, but we have all for the last 3 years been actively engaging with both financial advisors and different sort of institutional investors. And what is really interesting is that now, for the last year, mainly, we have seen a very accelerated trend of more asset managers and different form of institutional investors moving closer towards crypto, despite the fact that we are in some sort of crypto winter now, which we think is very promising. And I think a reason for that is some of the big trends we are seeing now with tokenization and stable coins, which to some extent started with the Genius Act being approved in the US last year. So that is certainly something we are working on, and we are seeing that a strongly growing interest, and we are having many interesting dialogues, and we are already also collaborating with various type of financial advisors that we are educating and certifying, allowing them to allocate a certain % of their clients' portfolios into crypto through Virtune's ETPs.
How do you view then the competitive landscape? Because, well, you have moved quite fast, and now you are the major issuer in at least in Sweden and the Nordics. And how do you view the landscape? And are there different segments, for instance, retail versus private banking versus institutions?
Yeah, well, if we look back approximately 3 years ago when we listed our first products, back then there were quite few ETPs in the market. But what we have seen is that back then we saw that one key element to drive crypto adoption forward from an asset allocation point of view, both from a retail point of view, advisor point of view, and institutional point of view, is to really focus on educating the market in a transparent way, both around the ETP structure, but also around crypto assets as an asset class and how they can fit into one's portfolio. So that is a mission we have been working very intensively with through these 3 years, where we have been having different type of educational events more or less every week. And during this time, we have also seen that obviously our volumes have been growing. We had 14 billion Swedish crowns in turnover last year. And over time, that has also attracted more competition and international crypto ETP issuers. And to some extent, we see that as a strong endorsement of our work in actually driving crypto adoption forward. But what we are also seeing based on the market share we are currently having, and something we are also seeing in other markets such as Finland and Germany, is that it's not only enough to list the products, you actually need to have boots on the ground and be very active in educating the market in different type of ways.
In addition to education, you are also doing cooperation with influencers, like Petter Northug in Norway. Is he working in Norway or also in Sweden?
Until we will see how the championship football championship plays out. No, I'm kidding. No, but we work mainly towards the Norwegian market, but of course also in Sweden to some extent.
Is this also a part of maturization of the industry, that is not this mysterious thing that people are doing and nerding? It is coming an asset class that regular people can have a saying about?
Absolutely, and that is a trend we are certainly seeing, and we are expecting to continue. And I also think that if we, for example, compare Norway to Finland or Norway to Sweden, what we also know is that the maturity when it comes to investing in exchange traded funds or products is quite different in different type of markets. So we are also using different type of channels to spread knowledge around how ETPs actually function. So for example, in Virtune's case, that our products are categorized as asset-backed securities, meaning they're always physically backed. How are they being priced? How can the products always be liquid during market hours and so on?
Thank you, Dan Christopher, and we look forward to watch your next 3 years, and it will be exciting to see how it will play out. Thank you very much, Dan Christopher.
Thank you very much.
And then we will move on, still being in Scandinavia, and we are welcoming Markus from Bitwise.
Thank you very much. Thank you for having me.
Yes, and you represent a global asset manager in this space, and one of the companies that we also refer to when it comes to the introduction of the ETFs in the States a couple of years ago. But you have also now moved into the Nordics with you as a head of the office in Stockholm. And why the Nordics and why now?
Yeah, so just to give a big picture, I've been working in, so first of all, I'm born and raised here in Stockholm, and I've been working in the crypto ETP industry since 2019. Some of the folks in this call know me from when I was one of the co-founders of an index provider. And a few years later, we sold that company. And about a year after that, I joined Bitwise. And Bitwise is the world's largest specialized crypto asset manager. We maintain ETFs, ETPs, AIFs, active strategies, SMAs, you name it, but we also work on-chain. We work a lot with vaults. We see that a lot of asset management is moving on-chain, so we're trying to be at the forefront of that. And Sweden is a place that's been at the forefront, at least in the early days. It was one of the first places to introduce some crypto exposure on an exchange in 2015 through XBT provider. And this has been a market that's been active for a long time, but for the longest time, it's been very retail driven. So while the activity was high, we saw that there was a big portion of the market that wasn't served. And this happens to be the portion which Bitwise has been historically serving quite well, which is the institutional segment and the wholesale segment. So we saw an opportunity to serve Nordic institutions and wholesale investors, and that's what we've been doing since the start of this year. We listed locally in Stockholm. We opened office here in Stockholm, and been growing the business since.
Many people says that the institutions in the Nordics are more conservative and reserved or whatever, but it seems like you thought or think that they are lacking the opportunities or the products or the offerings. Is that the case?
Well, I would say that institutions aren't more conservative in Sweden than they are, in the UK or Austria or France. Institutions are conservative, full period stop. And the thing with selling to institutional investors is quite different from providing any other investor group with these services, because it really starts at the research, at the educational part. And for those who don't know, Bitwise also maintains one of the largest research centers in the world for crypto, and we have people full-time delivering 2 to 3 reports a day. And this is investment banks grade investment research that we provide to the likes of Canaccord in the UK, Jefferies. We also provide it to media outlets such as CNBC, Forbes, here in Sweden recently to Dagens Industri. So we do provide this ongoing research provided by real researchers, ranging from PhDs up to doctors. And this is the first step just for institutions to at all feel comfortable, because before you get into allocation, you need to have some analysis on the asset class. So that's what I think helped us in the early days, because we work with over 4,000 investment advisors providing research on a weekly basis. And when we launched our ETFs, it became normal for them to go with a provider that also was providing the research for them. And this is sort of the approach we're doing here as well in the Nordics. We're working with institutions on the research part already, and now we are moving into what's called procurements, because that's how institutions allocate to crypto assets and other assets.
Yes, explain that to us. Of course, we know about procurement in other industries, SaaS or whatever, but how does the procurement process differentiate from a private banker type of decision?
Yeah, so a private banking client is essentially a retail client that has more capital, and that applies also to smaller single-family offices. They are pretty quick to decide whether they want to invest or not, and it can be quite opportunistic. But an institutional allocator works in much longer cycles. So what an institutional allocator does, and one example of this is the Sovereign Wealth Fund of Luxembourg, which invested into Bitwise ETFs at the end of last year, is that they open up a process where they try to be as neutral as they can to assess as many factors as possible, such as who are the people behind this issuer, what's the ownership structure. So in our case, for instance, we're owned by a number of investors, both venture investors such as Khosla Ventures, Naval Ravikant, but also some known people from the financial industry, including famous people like David McCormick or Kevin Warsh, who recently was appointed to chair the Fed. But also who are the people inside of the company, who's working there, what backgrounds do they have. So they scrutinize it quite a bit. The same goes with the investor, which other institutional investors have already allocated to this issuer. And then, of course, it's about the products themselves. It's about how does the custody situation look, how many custodians, how long is the track record of the fund or the product, what is the assets under management, how does the slippage risk look. All of these things are things that matter for an institutional allocator when assessing which product to go with. And we're quite used to being in that process. So we've done that quite a few times, and a big portion of our assets under management is institutional. And this is why I think that institutions in the Nordics feel like they're not they're comfortable with a situation where Bitwise products are in front of them.
What have the results been then since you introduced your offerings 6 months ago?
Yeah, we've been a really tough market, but despite that, actually, we've been fortunate enough to grow to more than 1 billion Swedish krona, mostly through across our different product suites. And this is something that I hope will be even better now that the market hopefully turns around in the end of this year and next. But we see some, our research team sees that we're still a few months to go with this bear market.
Yeah, what are the trends and what do you think about, and your researchers think about the market?
So tokenization, of course, and the stablecoin narrative still continues to be a winning trend. We saw that our hype ETF gained almost 100 million in assets in a very short time when we launched just a few months ago. And we also see that there is a trend where investors are looking for ways to put their capital to work. The single asset exposures are pretty common now. In the early days, you could charge a lot for them, 2.5%. We offered the cheapest Bitcoin product on the Stockholm Stock Exchange, so the Nasdaq Stock Exchange. And the reason for that was twofold. First, because it's a bit exposure, so it's a simple product, and then because of the economies of scale. And I think that what we're going to see next now is that people want to see that you can generate yield, and with that I mean not just return on capital, but some premium income on your Bitcoin, on your XRP perhaps, and that you can actually see that you're getting that total return across your suite of ETPs, and that happens automatically inside of the product. So probably that's going to be the next step for this industry, especially the more sophisticated investors are already there. And currently this is something that's mostly limited for those with a lot of capital.
Are you thinking about staking, or are you referring to another type of exposure?
There's a lot of things, a lot of ways you can generate yield, and staking is one of them. So, for instance, Ethereum, they have a network yield of 3%, and we actually own two of the largest validators in the world, Chorus One and Attestant. So we do our own staking in-house, which is why also we can provide yields at close to the network staking rates. And I think that when I'm saying that yield is the next step, I'm not necessarily thinking about staking, but I'm talking about generating yield on assets which not naturally have staking in them, such as Bitcoin and Bitcoin and XRP. And then we're talking mostly about harvesting volatility or using DeFi vaults.
Yeah, and you have also invested and bought a company with 200 people, I think. And what is that the way the industry is moving? Not only be an issuer, but also doing other types of services?
Yeah, for sure. I think that long term, the way the ETF sort of revolutionized the mutual fund, and in Europe, the ETPs that we work with are structured similarly to ETFs. The vaults are gonna revolutionize the industry again. It's just faster, cheaper, more efficient. The liquidity is there. We saw with Hyperliquid just how interested people are in these in trading 24/7. And I think that with the likes of Morpho, we're really going to see the industry moving there in a fast pace. So yeah, just waiting to see that.
Thank you very much, then, Marco, and we are looking forward to talk to you again and look out for how the different segments of this market is evolving. So thank you very much.
Thank you for having me. Have a good day.
And then we are still in Stockholm, and then we are welcoming Jakob. Welcome, Jakob.
Thank you.
And we need to know who you are and what you represent and what role you have in Valour.
I'm the Chief Revenue Officer at Valour, an issuer of crypto ETPs. Valour has the largest offering of crypto ETPs built by industry veterans, founded in 2019. The same year, actually, as I founded Winter, a regulated index provider, which I ran as the CEO until I sold it to Kaiko in 2024. And personally, I've been in crypto since 2016, so 10 years now, when I researched Bitcoin and blockchain as a researcher at Stockholm School of Economics.
Yeah, and as I understand, one of your founders also was involved in the first ETN or ETP in Stockholm. Isn't that the case?
Yeah, Johan Wattenström founded Valour in 2019, and he also created this whole industry, or started it in 2015 when he founded XBT provider.
Yeah. And as I understand, your company is not listed, or your products are not listed in Nasdaq, but you are listed on Spotlight. And why is that? And please tell us. Yeah.
Sure. Well, the parent company, DeFi Technologies, which owns Valour, is listed on Nasdaq in the US.
Yeah.
And Valour's products are listed on Spotlight. Now, this allows us to list a plethora of crypto assets, including smaller cap coins, coming to market ahead of our competitors, sometimes years ahead, which is in line with our strategy. In addition, Spotlight's been a strong and reliable partner for us.
Yes, and how you're listed in another country, but how is your position at the moment when it comes to the Nordic and the European market?
Well, Sweden is our home market. That's where we have most of our AUM, and our products are frequently the most traded product in the Swedish market. We have a Swedish founder, Swedish sales, born and raised Stockholm. So it's a key market for us.
And when it comes to the client groups, are it mainly retail, or it private banking, or how does also institutions play a role in your work?
Yeah, so we see both retail and institutional clients, and we're seeing more interest from family offices and smaller wealth managers who want to allocate through a familiar instrument rather than going through an unregulated structure where they own an asset that means that they can get a minus 100% return and lose everything if they forget the password. And our ETP solves this problem for an institutional investor who wants to allocate to crypto. The wrapper is perfect for that. So professional investors can't hold an unhosted wallet on their books, but they can hold a regulated security that settles like an equity, is fully hedged, and sits inside their standard custodian account. So our products, which are fully hedged, traded intraday with tight spreads and good liquidity, is definitely catering both to retail investors and to professional and institutional investors.
When you have a large range of products, how type of exposure is it? But does that also mean that you're not only referring to Bitcoin and Ethereum, but you're also having a larger type of investment opportunities?
Yes, we have over 100 ETPs, which is a lot of choice, and we think choice is good. And we're offering more choice for the investor through our broad selection, whether it's single assets, leverage, 2x, index products. And for most large cap crypto assets, investors can get it from us. And this turns us into a one-stop shop for any investor who wants to allocate to crypto. They can start with Bitcoin Zero and then stay within the family of products that we're offering at Valour as their taste develops into other assets like ETH, Sol, and all the way to something esoteric like Sui or BitTensor. And as people get more advanced, they can start to dabble in leverage products like plus 2x or minus 1x Bitcoin short, intended to be held for short periods of time. And we're the only ones who are offering Bitcoin short, for example, in Sweden.
How does that work?
Well, it's as all leveraged ETFs work in any asset class. It's you get a minus 1x return of the daily return of Bitcoin. So it's exactly as in a stock or in another leveraged ETF scenario.
Can it also be lended? I mean, exposure when it comes to financing, or is it just minus instead of plus, if you understand?
It's so the short is minus 1x leverage, and if you, for example, want to hold it during the day, or you already have a long position in Bitcoin and you think that you want to go out of the market for 5 hours or a short period of time, this is indeed a suitable product for that. And likewise, if you think that it's gonna be a bull run in a short period of time, then a leveraged 2x product is good for that. And now these are tailored more for traders than for long-term investors, and most of our investors are long-term investors, and that's why I think something like a Bitcoin Zero or Ethereum Zero is an excellent product. No management fee, so you get more crypto for every year that you hold it, compared to other competitive products that charge a management fee.
How can you run a business without a management fee?
Well, we run a very profitable business because some of our products have a management fee and some don't. Bitcoin Zero and Ethereum Zero provides price exposure to Bitcoin and ETH, tracking it 1-to-1. And the other products that we have, they have a management fee. And so in aggregate, we run a very profitable and healthy business. And so we think that these are excellent entry products. Anybody who wants to start their investing journey in crypto should probably start with Bitcoin. It's the largest asset. It is the one that has the most history behind it. So Bitcoin and ETH are both two excellent starting points. And users of Avanza, Nordnet, Montrose, TYR, and banking customers can reach these products at the regular bank or broker. So it's easy to find, and we want it to be the obvious choice. And you mentioned XBT Provider before, and this is a product that has a lot of AUM in it, and I think that that's great. In 2015, it was the only product. Today, there are more products you can choose from, and thanks to the ISK account or the KF account, you can trade out of a high fee product and into a low fee product, and potentially save, let's say, 10% over 5 years. So that means more crypto in your pocket, which of course is good for your returns.
In closing, how would you then define your positioning, your sweet spot? If you say Virtune is the company that has moved volumes for the last 3 years at least, and then we have the global companies moving into the Nordics. You have a history, you have a high range of products, but what would you say is your sweet spot?
Right, so we have the broadest choice of products, which means that we're a one-stop shop for anybody who wants to invest in crypto, whether it's retail or institutional investors. So it is an obvious choice to start with Bitcoin Zero or Ethereum Zero, given tight spreads, no management fee, and fully hedged products, meaning, for example, we have $90 million worth of Solana. It means that we then hold that amount of tokens ourselves. So safe, simple, secure access to crypto for the single assets. And personally, I'm speaking more to professional investors, private banking, family offices, other types of institutions. And for them, it's two choices. First, should I invest in crypto at all? And second, when I do so, which wrapper should I choose? And I think on the second question, Valour ETPs are easy, safe, and have tight bid-ask spreads, as well as a very strong balance sheet with $100 million of cash, which is very useful in case of hacks. And I don't think this can be said for many other issuers. But the bigger question that a professional investor or institutional investor are asking themselves is, should I invest? How much? What's the position size I should go in with? And this comes to, or it boils down to a willingness to preserve purchasing power, to diversify your portfolio, to realize that you don't fully understand anything you're invested in, but you need to listen carefully to the investment case and make an informed decision on whether you should hold a neutral weight of 2% crypto, be underweight with no crypto, or overweight with, let's say, 4% or 8% crypto, which is optimal for Sharpe ratio, considering drawdowns and value at risk. And my role at Valour is I'm here to answer any and all questions for professional investors working through these questions.
Yeah, and you were pointing towards it, that if you today have no exposure towards crypto or Bitcoin, that is also an active decision today. Isn't that the case?
Yeah, that's exactly my point. So I think a passive investor should hold around 2% of crypto. If you're underweight that, that's fine. You just need a strong case for doing that. In the last 5 years, I've been overweight gold in my portfolio. I've been overweight crypto because of a macro thesis, and because that's how I want to position my portfolio. Now, so 2% I think is a neutral allocation. If you don't know anything and don't have any opinion, go with 2%. If you know more, if you're more willing to increase the risk-adjusted returns, then you can look at other higher allocations. And it also depends on what your investment goals are. Capital preservation, do you want max returns? It all boils down to what's the mandate, your investment mandate, and what's your goal with your portfolio.
Okay then, Jakob, we will follow you as well as we follow the other Swedes, international players in this industry. Thank you very much, Jakob. And then we will welcome Håkon from Nasdaq. And for the other people in the show, this is the first Norwegian today, but you are not working out of Oslo. So tell us, Håkon, who you are.
That's correct, Martin. First of all, very nice to be here. Thank you for inviting me, and apologies for the late entrance. I had to bypass some firewalls to access the stream. But my name is Håkon Holm Østvedt, and I'm part of the European ETF and ETP and cryptocurrencies team here at Nasdaq. As you mentioned, I'm located in Stockholm, but just like yourself, a Norwegian.
Yeah, but if we start talking about Nasdaq, and Nasdaq has been in the ETP industry for a long time, sort of as a regulated product, but also you were listing the first crypto product back in 2015, I think. And why did Nasdaq do that? That's sort of a forward way thinking, I would say.
Yeah, that's correct. Back in 2015, we were actually the first venue or exchange to list a product with cryptocurrencies as an underlying, and we are call it traditional, or are viewed as a traditional stock exchange, of course, with a focus on technology stocks. But it is sort of in our DNA to be innovative. And when we saw an opportunity to list a product back in 2015 with the new technology, which was really gaining at least some traction at the time, we took that chance. And it wasn't that big of a leap for us at the time, because we, at the time, and as we do now, had a lot of other products with other underlyings. We had electricity contracts, we had orange juice. So adding another, albeit technological commodity, if you will, or asset, felt quite natural to us at the time.
Yeah, so in principle, it is a regulated product with some types of link to another type of asset, from orange juice to gold to crypto, whatever. But as I've said earlier in this show, that maybe a lot of crypto investors really was discovered this sector when they heard about the ETFs in the state. But ETPs has, as you explained, been in Europe for a long time. But what's the difference between ETFs and ETN and ETPs?
Yeah, and ETPs. Yeah, and to put it simply, and I think, of course, all the other speakers here know this very well, but ETPs it's an exchange traded product, so it's kind of an umbrella, whereas an ETF is in Europe under this umbrella. The difference between the US and the European market is that in Europe, we do have a bit more financial regulations which causes an ETF to be required to have diversification. So it needs to be a portfolio consisting of more than one asset, while in the US you don't have these requirements. And the result is that in the US you can have a ETF with just one underlying cryptocurrency. This is not possible in Europe, causing us to use the ETP vehicle. That being said, an ETF is still an ETP, but it's under the bigger umbrella. So here in Europe, you would have the crypto ETP set up as an ETN, an exchange traded note, which is a debt instrument, or a ETC, exchange traded commodity. But to put it pretty simple, an crypto ETF in the US is very similar to a crypto ETP here in Europe, causing a bit of misunderstandings, especially when we're speaking to our American colleagues. But it's very closely to the same product.
And of course, you are then an exchange, so then the issuers, they can then apply to have their products listed at the exchange. And what is the process, and how many products are you offering or are available at the moment?
I'm glad you asked. Yeah, going back to 2015, we started with one product and we increased it quite slowly, to be honest, because we did not want to open up too much as the regulations weren't really in place. So we were kind of waiting a bit to see how the market evolved and how the regulations evolved. Now that we are in a space where you have very good regulations in the crypto space, and especially the crypto ETP space, we are able to open up for much more both issuers and products. Currently, we have 73 crypto ETPs spread out over Nasdaq Stockholm and Nasdaq Helsinki. And the process it does take a bit of time, but we do work quite efficiently, even though we have a strict framework and rule book. So you need to firstly be approved as an issuer to even be able to list any sort of product at the exchange. And then when you are approved as a issuer, you are able to send an application for the product. And then we will approve the product and also the underlying assets. So you will have some underlying assets that are not approved by our surveillance team, and thus you cannot create crypto ETPs on some of the current cryptocurrencies that exist. And what we look at when we approve a product is that you do need to have sufficient liquidity in the product. The product itself needs to be securitized. It needs to be issued by a fund company or another kind of financial company. If it's not a regulated company, you need to have physical backing of the underlying assets. So if it's a crypto ETP, there needs to be actual underlying cryptocurrencies, or say Bitcoin, for an example. The company needs to actually have that on book.
So even if then the products are listed in the Nasdaq Stockholm, it is available also for investors for all the Nordics, but then through distributors. Is that the way you are doing it?
Yes. So it's you are able to trade these products through distributors such as Nordnet, who attended here today, or Avanza in Sweden as well. But also through all of our members if they themselves open up for trading in this product. So in some instances, it will be up to the bank or the distributor platform, if you will, to open up for trading in these products. But if you are a member at Nasdaq, you are in theory able to trade this product or these products.
You have moved to Stockholm quite recently to join the team in this new job. And what are your ambitions and what are Nasdaq's ambitions?
That's correct. I moved here in March, so it's a bit of mixed feelings with the World Cup right now. Going to watch the Norwegian and the Swedish game tonight, so we'll see how well welcomed I am with the Norwegian shirt on. But our ambitions are high, of course. There was a great year last year with a lot of new listings and a lot of volume in the underlying products. As mentioned earlier today, there have been the crypto ETPs have not been as hot as previously, but we do hope that it will increase again. But we are one of the biggest venues for crypto ETPs in the world, and our ambition is to remain that and increase both the number of underlying assets that is possible to trade at our venue and the different products that are traded.
Outside of the ETP space, there is also a lot of things happening in the financial industry. Wall Street moving on blockchain, stablecoins, tokenization. I know that this is not your responsibility, but still it seems like Nasdaq is moving all over the place, so that maybe then in 3 or 4 years you will not be the head of ETPs, but the head of tokenization. What do you think?
We will see. Now I'm not the head of ETPs currently. It's my colleague Helena, who's
I know.
been working with this for many years. But yes, we are. The financial world is changing a lot, and we do see a lot of opportunities with the new technology and the tokenization, especially. What we see mostly for Europe's sake is that it's potential for really benefiting the markets in terms of post-trade processes. Christopher mentioned earlier today that the European market is a bit fragmented. You have different clearinghouses or CSDs in the different countries, causing it to be a bit complicated and also expensive for a lot of both issuers and trading firms to do business across the different countries. With tokenization and the technology behind and DLTs, I believe, or we believe, that we can really make the flow more efficient. We can decrease the time it takes for clearing the instruments, which will open up for really better liquidity across the markets. And we are part of Ceterion, which is a collaboration with Börse Stuttgart, working very focused on this.
So there will then be both development on the regulated side on the ETPs, but also then changes in the infrastructure of the exchanges, maybe all over the world. So thank you very much, Håkon, and happy soccer game, not only to you, but to everybody. And we will then close up regarding this event. It is the first virtual event focused on the ETP and the ETF industry. We have had a lot of leading speakers. We have had people from the macro environment, from the stock exchange, or the exchange, not only for stocks, and also for distributors. And we have been also happy to have support from Coinmotion, the Mint, K33, and TYR Markets. The recording from this event are available as soon as we are closing up on LinkedIn, YouTube, and Kuiper. And we will also do some editing of some of the interviews and talks that we have had there today. Before we close up, it's also important for me to say that we are then increasingly investing in our website, kuiper.io, where you also can read articles both in Norwegian, Danish, Swedish, and English. The recordings and a lot of other type of information about this event is available on the landing page. And we also have a bundle of 3 to 4 newsletters, where one of them is the daily newsletter today.kuiper.io. And as we today are doing this event in the regulated product area, it's also important to say that this is the last day where you will get news related to MiCA improvement all over Europe. So follow our platforms and you will also get the news, and we will do an update also later this week. So thank you very much for joining us, and happy and have a great week so far.